Okay, team, I have 9:30, so let's go ahead and get started. First of all, good morning. Welcome to Morning Fuel, powered by the Petroleum Alliance of Oklahoma. I'm Brook Simmons. I'm the Alliance President, and I'm sitting in today for Dave Lenormand. We look forward to your participation. I think everybody knows the drill by now. Your microphones and cameras are off with the exception of the panelists that you see. And we are taking questions through the Zoom chat feature, so please, we look forward to your questions and as we get started here. With us today, we have two distinguished guests, and we are going to discuss the economic downturn and what effects we're seeing on state and local government budgets. With us, we have the Honorable Clark Jolley, Vice Chairman of the Oklahoma Tax Commission. Give us a wave, Clark. And Dr. Russell Evans, Associate Professor of Economics at Oklahoma City University and Executive Director of its Economic Research and Policy Institute. Thank you both for joining us. We look forward to a good discussion today. And Commissioner Jolley, if you'd start, we'd like to learn just a little bit about you and what you do on a day-to-day basis.
Sure. Well, first off, thank you very much for the opportunity to join you all today. I'm looking forward to the discussion. Actually, really looking forward to hearing from Russell so he can tell us exactly how much money the state's going to have to spend, because he'll tell us all the production numbers and all the prices. So really looking forward to Russell's information. No, my name is Clark Jolley. I'm the Vice Chairman of the Oklahoma Tax Commission, as Brooke said. For 12 years, I was in the Oklahoma State Senate, the last 5 of which I served as the Chairman of Appropriations and oversaw negotiations of the state budget on behalf of the Senate. Since March of 2017, I've served as the Vice Chairman of the Oklahoma Tax Commission. The role of the commissioners is to oversee the general direction of the agency and to act in some ways as a judge in tax litigation cases to resolve taxpayer disputes. But we also serve the vital role that I think is why we're here today, of voting and approving estimates of revenue for the legislature and the budget preparation team for the governor to use in crafting Oklahoma's state budget.
Great. Thank you very much for that summary. And Dr. Evans, would you please tell us a little bit about what you do, the Oklahoma Energy Index, which is sponsored this month by Insurica, and a little bit about what it shows.
Yeah, so I appreciate this opportunity to be here. I'm always happy to talk about the economy and always happy to talk about the oil and gas industry. So I serve as a professor of economics here at the university, and part of my role is to serve as the executive director of our Economic Research and Policy Institute, which is kind of an external facing entity within the College of Business. And so we interact with outside clients doing work like we do for the Alliance on the Energy Index. We've also worked with other oil and gas entities and organizations and a lot of non-oil and gas clients as well. So it gives us an opportunity to kind of survey the economic landscape of the state from a 30,000 foot view, right? So I'm not very often, down on the ground floor of the forest inspecting individual trees, but it gives me a chance to kind of survey the state and keep tabs on kind of how the state's doing. And so I'm really excited to get to share some of that today, right? I think I was fortunate to come out of graduate school just a few years before the great financial crisis and the Great Recession. And there has been, economic tumult since. And so in a lot of ways, my profession my career has benefited from the uncertainty that has surrounded economic conditions for so long and created some interesting conversations. And certainly that's where we're at right now in Oklahoma, is a very interesting economic conversation. So I'd be happy, Brooke, I think on your prompt, you want to take a minute and kind of talk about the Energy Index just briefly to kind of set this conversation up?
Yes, let me set the stage, however, for everyone. I think that most of us who are participating in this webinar understand that the central driver for Oklahoma's economy is petroleum. The industry generated $65.4 billion in state GDP in 2018, accounts for $1 in $3 in earned income, about 1 out of every 5 jobs in the state, 1/3 of the state's total economic output, about $36.8 billion in household earnings in 2018, and more than $30.4 billion to land and mineral owners since 2003. On top of that, we have the taxes that flow from the industry to the state and local governments for teachers, public health, roads, bridges, prisons, etc. And that amounted to what, $1.13 billion in gross production taxes for fiscal year 2019, and more than $2.6 billion in taxes each year for the last decade. So with that sort of setup, where are we today when we have 9 rigs running in the state and production has been basically shut in for several weeks?
Yeah, it's unusual times. So let me thank you for citing all those numbers. I think a lot of those numbers are from some of the work that I've done in the past. So I'm always grateful to see that the work is carrying over somewhere. It is really unusual times, and so let me back up just a little bit and set the stage for today's conversation. We maintain a monthly energy index, and the energy index that we maintain really has 3 components to it: oil and gas primary employment, some drilling and support employment, a portfolio of Oklahoma equity stock prices of Oklahoma oil and gas companies, rig activity, spot prices of oil and natural gas. And so we kind of take these 6 components and then we weight them by their volatility. And so we try to give more voice to less volatile data series and less voice to more volatile series. And so you can imagine taking these 6 components and then looking at how they change month to month, the percent change month to month, but then taking a weighted average of that percent change that's inversely related to volatility. So that, again, we're not giving too much voice to wildly volatile data series. And so and then we set as a baseline the year 2000. And so this kind of lets us track how is overall the industry performing month to month. Is it expanding? Is it contracting? And it also lets us look back and kind of compare across some different time frames. The reason the energy index, I think, is so important to Oklahoma, I think, one of the reasons it's been something that we've done now for going on 4 or 5 years, is because it's such a strong predictor of future economic activity. And so when we first developed the index, we really tested different index constructions against its ability to predict future state employment and income. And essentially what we found is that the energy index alone, if all the information you had was the energy index, you can develop a pretty robust forecast of future Oklahoma state income because there's so much predictive and leading power in the index relative to where the economy is going. And so I think kind of with that backdrop, I think that's what makes the index so important is it helps us track real time, almost month to month, what's happening in the industry, but it's also a bit of a predictor of where the economy is going. And so I shared some slides. I think I have some slides shared with your team, Brooke. You're welcome to share them if you'd like. But needless to say, the energy index right now is down and contracting fast. I think my opening comment would be, as we set this conversation, is I have colleagues that do what I do here and at other universities that when we first started going through this contraction here just a couple of months ago and it really accelerated, kind of made the comment that, we've been here before. And I would challenge that notion just a little bit, that we have ever really been where we are now before. We've certainly been through boom and bust cycles. As a child, I guess, I lived through the 1980s bust, right? My father is a petroleum geologist, so my family was exposed to the industry. But this is not really that, right? As the comparisons that we might want to draw, this is an unusual time, given what's happening globally with changes in global demand for oil and what we think about as peak oil demand. And so this will be an unusual time as we think about the very long shadow that this period will cast over future years and how long it will take to crawl back to normal. And so what the index shows right now is that the industry is in steep contraction, as you alluded to. New production basically turned off in the state right now. And it really portends some very rough economic news that we're living in now and will experience in the quarters ahead. And then it really foreshadows what would be a long and slow crawl back to something that looks like normal oil field activity, normal economic activity. And the new normal will probably not reach the old level of what we thought the previous normal was. Maybe ever, but certainly not for many years.
Well, notice that with regard to some of the reports out of the tax commission and from the state treasurer's office, the impact of that downturn on the state budget and how our public policy officials are going to plan is going to be significant. I see that sales and use taxes for cities and towns are down almost $16 million from June of last year. The total gross receipts for May is down $150.5 million from May of last year. We have, let's see, an increase in jobless claims in Oklahoma of 188,950 in 1 month. Commissioner Jolley, talk to us a little bit about the budget, how it is forecast, and what tools are used, and then your take based upon this information about where we're headed from the Tax Commission's perspective.
Okay, I'm going to try to, if possible, if I could share my screen. I don't know if I can. It's telling me I'm not able to do it just yet, but I can talk over the process. And let's see. Yeah, let's take a look. Go to the second slide if you would. I don't think that's mine. So if you can go to the second slide that's on there, you'll see the forecasting process. A lot of people don't understand the forecasting process. Yeah, that's the estimation process. Every November, the Tax Commission, by statute, has to project the revenues that we anticipate the state will bring in from all of the major tax types plus the individual smaller tax types. Our major tax types being individual and corporate income tax, so income tax being one, sales tax, use tax, motor vehicle tax, and lastly, gross production. So every November, we have to forecast what will be coming into the state the following July through June of 2 years later. So every November, we will project the following year's revenues for that 12-month fiscal year going from July 1 to June 30. The governor bases his budget on those numbers and has to present it to the legislature on the first Monday of February at the beginning of the legislative session. Then we're asked to do a re-estimate with newer data for the legislature to be able to use in the budget process. And we come back in February and use numbers that are about 4 months newer. But in between those dates, we are continuing to always look at what the dollar figures are and what the production levels are. If you go to the next slide, the gross production roll is one of the 5 major tax types. We estimate them every month at the Oklahoma Tax Commission. We're always taking a look and watching and monitoring how things are improving and declining. And we use the latest data possible in our actual estimates that we do. If you'll go to the next slide, you can see what we're currently using and what we're currently doing. We base our prices on our estimate, on EIA's estimate and their forecast for however long out we are to hit the fiscal year. But that EIA price is not the Oklahoma price. There's a difference, as all of us know, between what you get on an Oklahoma price and what you get with EIA's forecast or some of the other forecasts you can find. We calculate what is that average difference based off of 24 of the last 36 months. We used 24 of those last 36 to try to calculate what do we think the Oklahoma price difference is going to be. Now, we've not been able to project oil and gas and its impact on the rest of the state budget. Brooke, you mentioned the impact that it has. It's absolutely a domino effect, and all of us, I think, are aware of this. But if oil and gas is not producing well, there's not as many jobs. If there's not as many jobs, income tax goes down. Sales tax revenues go down. Use tax revenues go down. We see just a dominoing effect on that. But we don't just have the oil and gas issue with price right now. We also have the pandemic and how people have adjusted their spending due to COVID that is making it even more difficult for the state to have a quick recovery or to have diversified revenues be able to supplant the reduction that we're seeing in gross production. So what we're currently doing, we're using what happened in the last economic downturn for oil and gas back in 15-16. We're using that as kind of a predictor to see, okay, well, the last time we had a downturn in the economy, what was the impact? We're using that data to inform what we're currently doing, knowing that it's not right, but it's the closest thing we have to be able to forecast with any type of reliance. If we can go to the next slide. We are looking at also unemployment compensation and some of the other things that we're seeing with paycheck protection is actually helping stabilize our income tax revenues. And obviously, sales and use tax, Brooke, as you mentioned, is down. The last question I know that people ask is, well, but we have a savings account, right? And if you look at the last slide I've got here, this shows us where we were before session and where we are after session. Before session, we had $806 million in our Constitutional Reserve Fund, or what we call the rainy day. We had an additional $196 million in a new fund called the Revenue Stabilization Fund. After session, we moved $230 million or $200 million, I believe, out of Constitutional Reserve Fund into the Revenue Stabilization Fund. And we drained the Constitutional Reserve Fund almost down to not nothing. I think the low balance is like $2. We have $58 million currently in rainy day. So you can see we've had a significant depletion in our reserves. We fill up those reserves from excess monies. We're not going to have excess monies because of the current struggles in our budget to be able to restore those. So whenever we see high oil and gas prices, what you see on your screen, those numbers fill up very quickly. And when we see a downturn, oftentimes we see those numbers be drained. That's why we started the Revenue Stabilization Fund, is to try to provide more stability and not just depend on the rainy day fund for everything. So that kind of is an outlook of where we are right now. Obviously, things are changing on a daily basis. We're watching prices go up and go down. Our next estimate that we do will be in November. We'll see how much different it is from the last official numbers we gave in actually just last week, but they were based off of the numbers that we projected in February. So we're hopeful for recovery quickly, not just with oil and gas prices, but also with our economy, so we can bring in the monies that, Brooke, as you mentioned, pay for education, roads, and those types of things.
Dr. Evans, do you have any thought about just generally in budgeting and how you see the world, where we might be in November versus conventional wisdom, and also how we have to sort of drive forward, but we're looking in the rearview mirror to get our data. We're always a little bit behind that. Talk to us a little bit about that, how you see it playing out.
Yeah, so I would say, you think about general economic conditions, the way we're describing this to our contacts and our clients is that we expect the economic activity to stabilize relatively quickly. And I think we're kind of in that stage right now, we might call stabilization. But from there, you're going to have a long, slow crawl back to full employment or full economic activity. And so, one of the ways that I can describe this is we are in the midst right now of an extraordinary recession in Oklahoma. We will stabilize quickly into something that looks like an ordinary recession, but then it will be a long, slow move from ordinary recession to really being back to like 2019 levels, to full economic activity. So it's going to be a crawl. I don't see a path where there's a robust and quick recovery to full economic activity. I think we're still, when you look at what's happening with health policy, we don't hear a lot of chatter, a lot of inclination to go back to strict shelter-in-place, stay-at-home models. But you are reading stories all the time about prolonged changes in behaviors, right? So like just this morning, if you picked up your financial newspapers, you might have seen articles on restaurants that are simplifying their menus as consumer behaviors in and around restaurant meals changes. These sorts of consumer changes, these behavioral changes, will be much longer lasting. And so we'll kind of transition into something that looks like a new normal, but there really isn't a fast path back. And I think particularly where you have challenges is on the areas that dominated demand growth, that really drove demand growth for crude oil products, which was global air transportation, cargo and passenger. And so that's one of the areas where you're looking at historically what's been the driver of global crude demand growth. It's really been, jet fuels and passenger and cargo travel. And that's an area that right now we are seeing, less international travel, less passenger travel. You saw the president this week really ratchet down the work visas. And so less flow of individuals and goods and services between different parts of the world. And so that's one area where you're just looking at, well, it's going to take a long time for us to get back to, 2019 levels of air passenger traffic. And so we're getting a little uptick in air traffic right now, but we're still running, 60, 70% below year ago levels. And so, hospitality is kind of the same area. We've picked up a little bit, but still significantly below year ago levels. So there's going to be a kind of a long, slow crawl back. And I really appreciate Clark's comments because I think it speaks to the challenge that legislators and the states face as they have to try to deal with a tremendous amount of uncertainty right now. And so you're constantly trying to forecast and deal with that uncertainty in creative ways. But I think that uncertainty is going to linger. My final comment, you asked about where we're going, kind of looking back. You can in Oklahoma, because we are such an oil and gas state, you can look at in any given cycle when there's an oil, a kind of a bust, when you look at this contraction, you can just take the percent change in prices, add the percent change in production, and multiply it by the oil and gas share of state GDP, and you can predict pretty precisely what's going to happen to Oklahoma gross domestic product, right? So right now, if you just looked at the price drop we've had over this cycle, production now down about 10% from 6 months ago from where it was in the state. So if you just add together the change in prices and the change in production and multiply it by oil and gas being about 18 or 20% of direct state GDP, what you get is a prediction that right now, Oklahoma GDP is down 8 to 11% from where it was a year ago, which would already be in the Great Recession, our largest quarter drop on an annualized basis. We were down 10% end of 08 into 09. We went through that oil bust in that Great Recession. So we won't know until October when the Bureau of Economic Analysis tells us our second quarter GDP numbers, but we can use the oil and gas data right now to predict, to almost conclude that the GDP contraction that we'll show for the second quarter of this year in 2020 will break all of the records that we have going back to 2005. It will be the sharpest decline in GDP that we've ever experienced. We will bounce back a little bit in the third and the fourth quarters, but then it will be a slow recovery from there.
Commissioner Jolley, how does it strike you, and based upon your experiences inside the Capitol with your colleagues, how are they going to react to this sort of information?
Well, I think human nature is you look at our state budget, and from a former legislator's perspective, when you're looking at the budget, you're actually thinking about people. You're thinking about school children, and you're thinking about college students, and you're thinking about those kids that are in protective custody. You're thinking about the public and keeping them safe from criminals that we're afraid of and we don't want on the street. And when you're forced to look at, in my 5 years as chairman of appropriations, I had a shortfall and had less money for the second year from the previous year 4 out of 5 times. And the last two, I had $878 million and $1.3 billion in shortfalls to deal with. And when you're faced with these types of numbers, your first thing is, okay, well, no, we can't handle that. How are we going to do that? How can we afford that? We're going to have to hurt people, and in order to be able to balance our budget, which we have a constitutional requirement to balance our budget. And so I think the first thing you want to do is you want to fight against it. You want to say, well, the numbers can't be right. There's no way we've lost that much, right? I mean, there's no way that, just that little decline there is doing this and so you want to fight and argue against it. And then reality sets in and you watch the numbers as they come in and you start thinking, okay, what do we do? Where do we go? And it's a tough job. I don't envy Chairman Thompson or Chairman Wallace. The Senate and the House Appropriation chairs have been there and have had to do their job. And I don't envy them what they're having to do. Because everybody, if they wrote their own budget, you could come up with, there's 149 members of the legislature and one chief executive. You could come up with 150 different ways of writing the budget. And every one of them could write it differently because each one of them has different priorities. And the struggle is, at the end of the day, how do you get enough people to coalesce around one plan of action that shields education, that doesn't gut DHS and put us at risk for federal court intervention into our DHS systems? How do you adequately fund corrections to prevent, again, federal intervention into our correction system? So it's a very tough job for a legislator because they're told to do everything with nothing. And the agencies, my experience, and I don't think it's changed, is most agencies act as though, well, we can't ask for a budget based off of what's going on economically. We have to do it based off of our need. So instead of coming in and saying, okay, we're going to ask that you only cut our budget 10%, they come in and say, well, we need 25% increase to be able to just do what we're supposed to do. And so now you're forced with an even more daunting task of how do you balance and how do you make those priorities. It's a very difficult challenge for our legislators and for our governor to try to come up with solutions to.
So do you sense that the depth of this drop will force tough decisions that lawmakers previously have not yet been willing to really grapple with? I mean, it seems to me, speaking from an industry perspective and sharing what my members are telling me, I will share, I spoke with a service company yesterday. That service company told me that the taxing regime in Oklahoma has now changed their thinking, and they are producing products here in Oklahoma that they will never use in Oklahoma, and developing services in Oklahoma that they will never use in Oklahoma, but instead are taking those to Texas, New Mexico, Louisiana, and our other states that compete for that revenue.
Yep. I think the challenge there, if you look at Oklahoma's history, the way our tax code was founded, our founders said, you know what, we like this provision from Ohio, we like this one over here from Louisiana, we like this one from Kansas. I hope we didn't necessarily take any from Texas, but it was a hodgepodge, and it does not work well together. And our tax system, the way that our legislature, and guilty as charged on this because I was part of it for 12 years, rather than looking at holistic change of our tax system to try to make sure that it's balanced, and we look at the tax credits that we do for encouraging manufacturing and those types of things, instead of doing a holistic look, we look at specific industries, we look at specific tax types. We target the individual income tax and say, we got to cut our individual income tax. But we don't at the same time say, okay, well, we're cutting our individual income tax. What should we do about our sales tax that is going down and down and down as a percentage of our revenues? Because we tax goods, not services. And yet our economy is moving towards a service economy. So there's not a lot of money coming into the tax commission, for example, on records and books and CDs, because people don't buy records, books, and CDs. They subscribe to streaming services, and they get a service to be able to read or listen to or watch whatever they want. Well, we tax if you go and buy it, but we don't tax if you're just renting or watching it as a service. Oklahoma is in dire need of comprehensive overhaul of our tax system, but doing so will be the biggest fight that we've ever had, because everybody wants to say, no, don't tax us, tax somebody else. And if we could adopt, my belief, if Oklahoma could adopt broad-based tax system with low rates, I think we would see consistency. We wouldn't see the deep declines in revenue when the economy goes south, because it would be broad and it would be able to withstand that easier. But I have not heard anybody talking about this. So Brooke, I don't know. It would be I've always felt like the private sector is going to have to come up with a solution and fund it and encourage it to pass. Because I don't see the legislature having the ability to do that type of work. I think that's a huge challenge for our legislators to try to be able to grapple and understand the impact of what they would be doing on everyone, because it would be a humongous shift, but it's a one that's, I think, desperately needed.
On this topic, we have a question in the chat room. I'm going to read it verbatim. Do we have a clear picture of the impact of wind tax credits on state revenues?
I think we do after the fact. I think we have an impact of wind tax revenues as they come in. You know, clearly the state has moved to move away from and restrict that. I think the best work on that, frankly, if you want to look at the impact of it, the Incentive Evaluation Commission, I think they published a report. I don't think it's been real recent, but that's where I would take a look at the latest data we have on the clear impact of wind tax revenues, is what they came out with. We publish numbers obviously on all tax credits, and you can take a look at the end when they're all claimed. But I don't know that we have that great of a view of it ahead of time.
Dr. Evans, do you have any comment on that question?
Yeah, so on a couple thoughts, a couple brief thoughts. The first is on some of the foregone activity here in Oklahoma, and again, I will accept correction if necessary by your audience or by you, but from a 30,000-foot view, as you survey the difficulty that companies are having getting sort of access to capital markets, and the signal that capital markets seem to be sending to oil and gas companies right now, that the days of kind of leveraged growth, improved reserves are over, and instead the expectation is that companies live and operate within free cash flow, is really forcing companies to kind of focus on efficiently producing their core assets. And I think when you look across the table right now, the signal, again, from 30,000 feet, as somebody who's not a designated energy analyst, the signal from 30,000 feet seems to be that capital markets feel like Oklahoma has overpromised some of our assets. That maybe we overpromised the quality of some of our geological assets in the stack and the scoop. And you see the EIA and other groups saying, really, any growth in production will come out of the Permian Basin right now. You see producers in Federal Reserve surveys that are operating in some of our Oklahoma plays saying we maybe need a little higher prices than we thought we needed previously to really make these plays work. And so if that's right, if you believe those signals, I think it is going to force a bit of a change in perspective at the Capitol, where 4 or 5 years ago, the talk was, well, it was the good rock talk, right? It was, well, we have the good rock. The taxing regime doesn't matter. People are going to come and drill and produce in Oklahoma because we have such good geological assets. And I think if you believed capital markets that maybe we had overpromised or I don't know who the we is in this case, but if you believe that the quality of those assets is overpromised a little bit, then I think it will force legislators to rethink the taxing regime just a little bit with regards to the oil and gas industry, as you have a little better idea about the quality of your rock, as the phrase went back then. On the wind tax credits, I'll just say generally in terms of economic development, what we generally prefer to see on the economic development side is, and kind of this goes to Clark's point, is what we really prefer to see is a tax and spending system that reflects goods and services that businesses and households would be willing to pay for. In other words, if you propose a tax and spending mix and a household says, that tax and spending mix is desirable enough to me that I would pay more for my house to live in that community, then that reflects sort of a good public trade-off. Same thing for businesses. If businesses says, I would be willing to pay higher wages and operate in that community because of that tax spending trade-off, then that reflects a better trade-off. And these very targeted, economic development incentives that try to force an identity or an industry mix typically don't work as well as a broad-based tax and spending system that invites economic activity generally and then lets the industry mix develop on its own. And so my last comment that I always get when I talk about economic development is, are we diversifying away from oil and gas? And I always say, when you look across states, there's really nothing wrong with an economy having an identity or being specialized, right? And so I think it's maybe unique to oil and gas states or unique to Oklahoma that we feel like our economic identity is somehow inferior and we need to have a specific strategy to get away from that identity. When you think about a lot of communities, Northern California, Salt Lake City, Boston, Dallas, there are lots of cities that have a defined economic identity. And that just reflects the reality that they are specialized in tech or finance or health, or they have an area of specialization. There's nothing wrong with an area of specialization. I think the challenge is being agile enough to redefine yourself when and if necessary. And so I always remind people in economic development conversations that in Oklahoma, we really shouldn't be talking about how do we force diversity away from oil and gas. We should be talking about a tax and spending mix that invites economic agility so that our economy can redefine its identity as necessary and quickly over time.
Excellent point. You referenced transportation demand earlier and that decrease. Clearly, we're familiar with how to use Zoom. Some of us more than others. We're all used to it. And we all probably have a number of funny stories about how our lives are changing to this sort of format. So when you're talking about transportation fuel demand declines, and you have people that talk about energy transition, however they think about that or want to define that, and I have my own personal opinions on what the reality is of that. But if we're talking about a decline in transportation demand, and we're talking about how critical our industry is to everything that we're using today and holding in our hands, and we have to, I believe, as an industry, begin thinking about how we optimize that message when we're talking to not only lawmakers, but our constituents and friends and neighbors and things such as that. Do you have any thoughts on that or any value added?
Yeah, so, there are a handful of shops, really about 3 that I can think of off the top of my head, that are actively involved in this process of trying to forecast peak oil demand, right? Which is an interesting story in and of itself, because not that many years ago, right, a generation ago, we were talking about peak supply, right? The story would have been we're running out of supply. Now the story is we'll never run out of supply, but we will at some point transition away to an alternative fuel source. And so when's the year of peak demand? So demand will grow, and then at what year do we begin the slow transition away? And the shop that I kind of favor, just by how they approach this question, had pegged this number at around 2035 to 2040. And so they would have been saying we have about 15 more years of demand growth. And then it's not that we stop in 2030. We don't stop using oil in 2035. It's that we then begin to transition. Demand is a little less every year as we have this slow transition away. And so if you just sort of think about where we're at now, what we've done in the conversation is we've created an argument that maybe that period of peak demand has moved up in time a little bit, right? And so if you think about, and so you alluded to this, jet fuel demand and petrochemicals are really the 2 biggest areas of growth. If you think about those 2 areas of having a different now time cycle, you might be able to make the argument that that peak demand moves up in time a little bit, and that transition starts a little earlier. And so as I think about sort of messaging here, in Oklahoma, I think, one of the ways that I talk about this to my audience is that, again, as I just alluded, there's nothing wrong with specialization. There's nothing inherently wrong with having a specialized economy. And we probably have another 15 years to 2035, give or take 5 or 10 years either side, to some peak demand. And then you have a period of transition. And so you have some you have a kind of a relatively long life of the industry still ahead of you. And so what you're really asking yourself is, how do we best manage the oil and gas industry in Oklahoma over this next 15 or 20-year run of growing demand, and then over the next 50-year run of slowly decreasing demand, right? So if you got this life cycle, how do we manage this in Oklahoma to really sort of leverage the benefits that we get as a state? And so I think that's one of the challenges in terms of public policy and perception is kind of managing that transition. And another thing that, that I always remind audiences right now that I think is important in this conversation is that our oil and gas industry in Oklahoma is probably our most scientifically and technologically intensive industry in the state. And I think we miss that sometimes. I think it's easy to think about oil and gas companies the way we thought about them in the 80s as being a collection of engineers and geologists. And we forget now that inside those buildings are data managers, database engineers, data scientists, logistics, right? You have all these skill sets that are science and tech intensive that are portable into other industries. And so in a way, I think one of the things that's get overlooked in the messaging, one of the things that I talk about fairly regularly is I think we overlook sometimes that the oil and gas industry for us is a bit of a laboratory to grow individuals with tech related and sort of high education skill sets that are portable and transferable into other industries. And so it kind of creates a labor pool base that doesn't have to be strictly oil and gas anymore, but we have a labor pool now that helps to attract some other industries as well. They can also share in some of that common, tech and skilled labor base. And so I think there are some realities to where Oklahoma is right now, and we really should be thinking about maybe in 5, 10, and 40-year chunks of what this transition, what this play looks like.
Commissioner Jolley, do you have thoughts or comments as we approach the end of the program?
No, I think the only thing I would say is there's obviously the impact. You just look at the re-estimates that we did. We were asked, because of what had happened as it related to the pandemic and as it related to oil prices, we were asked to do a re-estimate. I think it's important. I'm very proud of the work that our staff does at the Tax Commission in estimating these revenues. Pew did a study a few years back of which states do the most accurate forecasts. And Oklahoma was in the top 5 of that in terms of accuracy. And we were the only state of those 5 that had anything to mention of reliance in the energy industry and the volatility there. So I think our staff does a very good job of projecting, but we have to project based off of the data that we're given. And so I think the thing I would encourage people to look at when you read about a decline in the state budget and people are saying they don't know whether our numbers are right or wrong, we historically have had a very good track record of, we're going to be wrong every time because we're being asked to predict the future, and we're going to be off. Now, are we off by $1? Are we off by a million or a billion? How much are we going to be off? We try to minimize that, but we firmly believe that this is a cyclical thing. Oil and gas will be back. That we're going to see production increase, that we'll see prices increase, that we'll see the domino effect again, bringing revenues back into the state. This is why we started the Revenue Stabilization Fund. It's why we have the Rainy Day Fund, is so we can absorb those increases and declines in our economy. And there's so many people that say, yeah, we're just done. And to Russell's point about diversification, I think just a reminder, we've been here before, we got through it, and we're going to get out of this and we'll be back again. But when we're back, let's make sure that we're wise in how we invest the money and spend the money. So that's the only thing I would suggest. And I appreciate the opportunity to visit with you all today.
Well, appreciate it very much. And as we close here, I just want to remind our viewers that we do have some new dates up for many events. The first Alliance event is right around the corner. We're appropriately socially distancing at the Alliance Open on Monday, June 29th, So I want to thank our panelists for participating in this. I want to thank those who have been online watching it. We've got a couple other questions come through, but I think we have to leave it right there. Thank you very much for your time, your participation, and we look forward to this again. Stay tuned for more Morning Fuels. Thank you.
Thank you all.
Thank you.